All right, all right, all right. Hey now, what's going on, everybody? Yeah, it's Doc. It's been a minute. It's been a minute. I've been away for a few years. I've been in the hospital and taking care of some few things, but I'm doing all right now. I wanted to jump on and talk about Tesla real quick. And really, I want to test out this new streaming software. Well, new to me at least. I want to get back into it. Tesla had a really nice pop today on a catalyst of Elon Musk heading to China to take care of some financial business. Mr. Musk, right? So anyway, before we open this week, I wanted to get into Tesla to capture this week's move to potentially 450. Now, why like I didn't just pull 450 out of nowhere? You know, it's part of a good resistance level, technical resistance level, and also a lot of people are looking at it. This is the quant chart. A lot of people are looking at it, meaning when we look at GEX, this is QTA, this is the GEX Gamma Exposure Suite. We pull up Tesla. This morning, that's last week. This morning, this is Gamma Exposure. This will show us basically where the major points of liquidity are, right? And you can see right here, 450 is that really strong high GEX area, GEX strike. And all of this is just padding to get us there. And that was something that really took my eye this morning. And then when we had a nice support system right here, oh God, we're going again. Nice support system right here. I was like, that's it. I turned my back for a couple minutes and turned back, and we're already running. That was frustrating. But anyway, once we got in, right, we're able to capture a good 15 or 10-point move on the way up to this resistance. And this is what I wanted to open up here. We know that when we want to do some day trading for SPY or even Tesla or whatever it is, we want to look left and we want to find where our supports and resistance are. And we do that by using yesterday's values and the overnight values, right? So why did we just blow through this resistance and then keep going? And why did we just stop out of nowhere? That was the intention of putting this stream on. But now that we're moving again, we might have to adjust a couple of a portfolio update. So when Tesla moves, it moves, and then you want to, if you're in options, right? Options is not something you want to buy and hold really for a long period of time. You want to get in right before the move happens and then get out just as the move stops, if not sooner. Even if you're trading, if you're trading Friday expiration, you still treat it as a day trade. It's almost close to a scalp as you possibly can. So if we wanted to get in right before, a little before we started the stream, and I said, I still think Tesla has room to go to 450. We would, let me just do this real quick. We would say, okay, we could set up an option and capture it at 447 or whatnot for the 15th, or we can do it for today. I think Tesla has, they have options for today. The problem with that is that we traded sideways for a good couple hours. So if we got in here thinking, oh yeah, we're going to go up more, the theta would just kill our position. As we traded sideways, it just bled out. And now that we're moving, we wouldn't capture, we were behind the 8 ball. We're now catching up. So what you want to do is just wait for a break, whether that be a technical break to let you know, okay, we're now going forward with this. Or in this case, let's see if it does it. It'd be cool if it does. Be a lot cooler if you did. When you have a break of a resistance, you kind of want to wait for it to recognize that resistance, right? So recognizing it, what does that mean, right? So we come up, okay, that's resistance, got it, mark it. But then when we break it, it doesn't just run. Well, sometimes it does, But what we're looking for is a turnaround and a tap to go higher. Now, Tesla is one of the most momentous trading tickers that's out there. And what usually happens is just when momentum kicks in, people buy in and it just goes. But if you have that, and mostly other tickers would do this, if you have this opportunity for it to pop that resistance, come back and test the door or test the lock of the door. So if you leave the house, right, you don't just walk out of your house and go. No, you turn around and you shut the door and you lock it and then you go. That's what you're looking for when you have a breakout. A breakout meaning a new higher high and potentially moving higher. You don't want to just get in right away. Okay, we're all in, 100 contracts, no problem. And we'll just sit back and relax. It turns around, it'll come back and test for a support. That support may be the line that just broke, or in this case, it may be the EMA. This is the 9 line, the trade line. It may use this as support. Whatever it is, we're waiting, and you don't have to. You trade it any way you want. But in this particular instance, I'm waiting for it to come back and tell me where support is. And it may not do it. It just may take off. But that's the more healthy way to get into a position, especially on a breakout. You want to let the stock, the equity, the option, whatever you're trading, you want it to recognize what you just saw. Like, we know that this broke. That's the high of the day. We broke it. Okay, so a lot of times when this breaks, you'll have a bull trap, meaning that, hey, we're all in. We broke no all-time highs. We're going crazy. No, we're going to come back, and the retest would fail, and it would drop lower, right? Meaning we'll pop that, and then the stock will drop and find a lower support around here. That would be a fail of a retest. You want to see strength in support. So break, retest for higher, or break, retest, fail for lower. Now this one is going to be a little tricky because we have a couple supports right here. We have one good one right here at 442.40 ish, and then a little lower, 441.20 ish, right? So it wouldn't. This is just a trajectory, and we also have the other EMAs that are right here. And you look at the history. All right, so we ran up once, and then when we consolidated, what did we use? We used the 60, and we broke down through the 60, and we touched the 100. So that we know it pays attention to that. And now that we're far away from it, we can assume, I know that's usually not what you really want to do, we can assume that this would be at least some point of hesitation or contention. It's not supposed to just drill right through it. All right, does that make sense? So as we wait for this retest, we can calibrate our option call, right? And I'm not going to tell you exactly how to trade your business. That's up to you, and that's more of a personal conversation. That wouldn't be for this video or this live, or if you're watching later a video, whatever. It would be a discussion. There's more to it. But if you're comfortable with the person you're following or the person you're trading with, they can tell you the points and where to do it. But at the end of the day, it really depends on your account size, your style of trading. You might be saying, you know what, I'm going to wait for here to get 100 shares of Tesla. And once I get my 100 shares, I'm going to watch it pop, and I'm going to sell 50, and then I'm going to sell 20, and then I'm going to sell another 10, and then I'm out. Someone else would see, like, you know what, I don't have that kind of capital. I'd like to get into maybe a debit call spread or a credit spread. Whatever the case may be, however you're comfortable trading, the levels stay the same. The areas of contention, right? And hesitation, really, that's a point of action. So as Tesla tests this EMA, I'm dropping down the 15-second, not to freak everyone out, but just to show you that you can kind of see a structure. So here we broke the trade line on the 15-second. Well, now we're heading down to the 60. This is on a 15-second. We're not really going to trade on this time frame, but it's nice to drop down to see the structure inside the candle. So like, in other words, these 3 candles all fit within this one candle. So if we're looking at this and we're trying to scalp a trade and find a perfect entry, this candle, okay, it's telling us that we're going down a little bit. It's not telling us the whole story. So if you just drop down 15 seconds, there you go. We have a drop down and a flag, and now a retest on the underside of the EMA that it just broke. So this retest is happening in real time on the 15-second chart. If we're on the minute chart, it looks like that. It just looks like a flashing candle. So it might be a little hard to discern what's up and what's down and what's going around and who's on first and whatever. But if we drop down to the 15 second, you begin to see a structure, a break, a retest, and now what's it going to be? Oh, we're going to pop above it? Okay, great. So once you have a trade momentum, in other words, if you use the 9 line, you trade momentum that you're on this side of it, you can comfortably go up the higher time frames and then see if it's still above it. So here we go. On that retest, we use the 9 EMA on the minute. Now remember, 450 was the area we were looking at for Tesla. 450 was the high GEX for the day. And all this, this is at 932. So what you do is you fast forward through the snapshots here. We'll go to the most recent one. And 450 is now the most popular, the popular kid at school. Everyone wants to be 450. Absolute GEX. That's the area with the most liquidity. That's the purple line. And that will shift through the day as absolute GEX changes. And I can show you another chart how you can toggle that data. But for now, I just wanted to show you that this 450 is a very highly magnetized strike. What do I mean by magnetized? I mean, has the most attraction. Right? Liquidity attracts the price action. And then once it reaches a high level liquidity, it will hold on to it. So not only is 450 a target and a magnet, but it also could be considered resistance. See how there's nothing after this 450? It drops off. It's a GEX drop off. We run up to it. We hit that 450 and then we're comfortable, right? The GEX is why would it want to leave here? I got everything I need. I got absolute GEX. I got food for as long as people are trading right here at 450. So that's what I'm expecting to happen. And whether that uses the 9 line here to pop off of it, or we come back down and touch this 443 and test it, right? It's not a guarantee that we're going to go back up to 450. It's just that this is such a strong signal, it can't really be ignored. Now, what would get in the way of getting us to 450? Well, there's other data. So first, let's look at the quant charts, right? So the run up for Tesla today, we found support, and then we just ran up into what seemingly was open air. Unless you look left, you can find some types of resistance, but not real local. So why did we seem to just stop right there? And how did we know to take profit? Well, if you have access to the quant chart through QT, you can do that sort of thing. This is the quant chart. You have your different areas and zones and lines, right? These gray lines, these 2 bars, that's the intraday lines. When you see a line being respected and you get the candle combination that you're looking for in a reversal, right? This is a pretty good one, right? You have this doji candle followed by, what is this now? One arm dumbbell. You have the lollipop, whatever you want to call it. These are bullish candles, right? They're reaching down, their roots are reaching down, but they're not holding. The action is towards the top of the candle. Almost it's pushing up. You can get that sensation that's pushing up. Don't push me. Push pop. Pushing up. And then followed by this big bar. This was the ticket in. This is the VWAP. We usually would break that, come back and retest or get a rejection. Did not do anything. Broke right through it. 2-day VWAP, broke right through it. You can make a case that this technical level at 430 and 428 when that broke, it wanted to come back and test it, but the momentum was just so strong, it kept going. So one thing that happens on momentum trades is that the gas runs out. We can't go up forever unless you're in SPY currently. And then the answer is yes, you can go up forever, apparently. But that's a whole other video for another day. So the gas will run out. How do we know where it's going to run out? You look at your quant chart and it'll tell you, listen, buddy, this is the sell zone. It's less likely to pass this sell zone rather than at least stop and at least do some consolidation work. And that's exactly what we did. That's not to say that we can't go further up, but it's going to be not the smoothest of paths. At least that's the kindest way to say it. So if you're in a trade and you're making this money and you're like, okay, I want to take some profit. Where do I take some profit? I mean, this is all green. I can't just get out when it's green, right? I have to wait for a reversal. Where do I know where the top is? First of all, you don't have to wait for the top. If you're in a run like this and you pick up 5 contracts, every time you pass a level, drop a contract or 2 contracts, depending on how many you got. If you scale in, you should also scale out. So if you pass a major level, before you pass a major level, take profit. And then after you pass that level, take a little more. You want to have the idea that you're constantly taking money off the table and lowering your risk through the trade rather than try to time it at the very tippy top. And then you get this little pullback here, and all of a sudden a $500 option becomes $375. All it takes is that little flip down, and people are like, okay, profit, take. And then all of a sudden you're caught. You're not the one in control of the price action. Just like any run up in a biomedical or any other crazy pop, you want to sell into strength. What does that mean? It means that if you're having this strong run, that's the time to sell. Not here, and not here. Why? Because if you're in options, this theta trading sideways kills your premium. If you're not familiar with theta, just think of theta as time. Theta ticks down as time ticks down. And it bleeds out. That's another way to think of it. So if you have your premium, you made your money, like, I know what? I think Tesla's got some more in it. Well, if you're waiting for that next move up, your profits, what do we say? It's like 500. You made $500. Now you're down, maybe 375, maybe 425, 450, 425, 400, 370. It's just bleeding out as time takes by, especially if you have a 0 DTE, meaning that expires that day. So pay attention to the charts that are given to you. These tools are available for QTA. If you're interested in joining, you can take the code, DNOW30, gives you 30% off your first month. But this is your cheat sheet. Your cheat sheets for day trading, for swing trading, for entries. And this is your other cheat sheet, the GEX. So 450 was a semi-technical level that we found on the chart, but now with this, it's real, it's tangible. So when we find, if we get back testing here, back testing, retesting, whatever testing. If this retest holds and it looks bullish, then that 450 is still there. And we can separate the different data and toggle it by this. Absolute GEX, I told you, right? It's the highest level liquidity. There's not a doubt. Without a doubt, it's 450. Sometimes there's a secondary and a tertiary spike that could climb, raise, or lower and be more of a traction or less. If all of a sudden absolute GEX starts running up over here and growing and growing and growing, and it gets larger than here, then the scales will tip. But right now, it's all on 450. What else could be in their way? In the way could be call volume spikes. It's going to be at 450, but let's just see. The highest call volume spike was where we first took profit at 440. So when we opened in the 420s, that initial pop, took you right to the call volume spike. If you needed any other, evidence of where to start taking profit, you have the sell zone in the beginning of the 440s, and you have the call volume spike at the 440. That would have been perfect trade. And I got out there. I'm not in one right now. I'm tempted to get in more because I was looking at that 450. I ended up taking full profit once we started trading sideways. Because life happens, right? If you're like, all right, that's happening, I'm just not going to take profit. I'm just going to wait. And then, you get a phone call, or, we all trade from life. We don't trade in a bubble. We don't trade in a vault, right? Things can happen. So keep the mindset of ABTP. Always be taking profit. And that way you're protecting yourself. You don't need to time the market. You don't need to what do you call it? Pin the top or top the trade, whatever you want to call it. You want to get in and get out and get on with your life. The idea is to get out before the bleeding starts to happen or before a reversal, either which one. Now I'm going to pause here for a second, and I'm going to take a small trade if this holds here. Now, we said that 450 was the target, and going back to you and be like, wait, 443 is I have to refresh this, but I'm leaving it out to show you. 443 is the area that, we can't pass. Well, we can pass it. It's just very, it's a little harder than just free air like this is. This is a quantitative, this is a mathematical level. And we'll drop down to the 15 to see if we're back testing on that. I call it back testing. You may call it retesting. Que sera, sera. So no back testing. We're just going to go. So what you do is, if you're aiming for 450, you can drop down to 475. I'm just going to put in a single one here. Maybe 3. All right, so I got my order plugged in. I'm ready to hit the button for go. But this is where scalping comes in as precise timing. You don't want to get in and have it drop down and go for the retests, right? You want to have a commitment one way or the other. So I'm going to go in one right now and see what happens. And I'll set a stop loss right away. It's a good practice to set stop losses after you put a trade in, just in case, right? In case we get taken away, or you happen to be trading live to an empty room. Some things like that happen. You never know. So we are going to go back test. So that's why it's good to scale in, right? If you're going to trade 10 contracts, you don't want to just buy 10 contracts at once. You buy 2 and 3, and then as you get, as this retest, you buy a few more. And that would be right there. If this proves to be support, this will be your stop loss. I'll drop it down a little more. 446, say 446.15. That's your stop loss. So we set stop loss there. So with options, you can't really, well, at least on the platform I use, you can't set, you have to set a price for the option itself. So I'll do a little math, and 135. The idea of a stop loss is you just don't want to get killed, right? You can take a little bit of a hit, but you don't want to lose your entire order. All right, stop loss is in, and we're going to wait. We're on the 15-second chart, so we're going to see a little more quicker candles. If we're on the minute, A minute's a long time when you're scalping. You know what I mean? A minute could be a long time when you're scalping. So dropping down to that 15-second gives you a little bit of an edge. Now I know Brian, he trades in the 15s, and I find myself popping onto the 15 to get a look that the minute and the 5-minute don't give you, right? So if we make a new 15-minute candle here and it starts off red, well, that's already, a bad starter. You want to see consistency, especially in momentum trades. Like this going into close, we want to see momentum. And 450, even though we have that, we're going to update this. 450 was the place to go, the place to be. Let's drop down and we'll just do today's expiration. Because as this moves, so will interest. No more interest above 450. People are saying, that's all right. I don't need more than 450. But let's remember this. As we get closer to 450, we should see this. So let's see. 452 right now has roughly 733,000. 733,000. 0.4 for the gamma exposure. And as we get closer to that, that may change. And if this starts changing, see, now we're up to 1.1 million. So interest is growing above our initial target. And that's what happens with momentum trades. Let's check into the nobody knows. Yes. What a beautiful, beautiful thing, right? Tesla found support, gave us the candle, a bullish candle system right here. Let's check on the 15 what it looked like. There you go. See, this is the benefit of checking out different time frames, right? Go to the 15. You have a nice trend down into support, and then this perfect doji candle. Doji is just, a small body, big wicks on both sides, or wicks on both sides. Doesn't have to be that big. Looks like a star. This is letting you know possible reversal happening. And then major bullish candle after that, that looked pretty good. On to the right side, or the positive side of the EMA, the 9-line trade line, and then it's uphill from there. Uphill being the easy way in this particular situation. And as you get further away from the trade line, it gets a little lonely, and it wants to come back and check to see if that support's still there. It just wants to know, hey, if there's something here to support. So as you get further away, you should start thinking, all right, at any minute now, we could start coming back and testing the support for the trade line. And then sure enough, when you see these candles, it's going to let you know, okay, we're going back to it. This may not hold every time. It may not hold every time. So now we're testing the EMA support, and we're also going to be testing my stop loss. Lots of times when you have a resistance broken, or a pattern that's executing, you may see a dip down. And you can argue whether it's on purpose or not, but I think we all know the answer. You'll see it pop down to a level that's just like a tack through a balloon, and it'll pop a lot of people's stop losses. So now all those people are now out of the trade. That liquidity is now bought up because everyone got out of that level, and there are people with orders at that level. New people got in, and they ride it up. Same thing that be happening here. We pop below the EMA, right? I set my stop loss right here, rookie move. But I'm going to play it tight because I'm I'm distracted a little bit. Pops the stop loss, and then we see higher, or it fails, and then we see lower. But that's the actionable level that I always draw the attention to. It's this level that could you decide whether, hey, we're going higher or we're going to go lower. And then you can decide whether to play it or not. I'm trying to see if I'm still in the, and I'm not. I got stopped out. Son of a bee, right? Stopped out just because of that one little boop. And as I'm making the stop loss, I'm thinking to myself, yeah, it could pop right through that EMA. And it did. So now I'm even more confident that we're going to pop up to that 450. Or at least toward the 450. Yeah. 450. I'm sorry. I was dancing between SPY and Tesla. By now, I mean, I'm looking at a 2 point 2 and change move. I'm going to hold off on my trade here. Not that I feel that we're going to fail. It's just that I just don't want to get into it. Listen, everyone, you don't got to do anything you don't want to do. Know that you don't have to take a trade. I love to say that day trading isn't called all day trading, right? It's just day trading, and it's not everyday trading. We don't have to trade every day. If something doesn't look right, don't take it. If you don't know, don't go. That's what I always say. You gotta if you're not used to my antics, I apologize. Or maybe I don't know. You might go a little crazy if you're staring at monitors with lines on it too. But I guess you do that. I want to also bring up silver, as this is doing some more consolidating work over here. Silver is a commodity that you make jewelry out of it, and it's a lot of pretty stuff. But it's also very useful, medical, right? It's a terrific antibacterial. I should know it. I've used it plenty over the last 3 years. And it's also powering. It's also in our electronics. It's also in solar panels, big one. And we were in this. First of all, I chased silver. I chased it on this run up as something very shocking happened in my life, and I just said I need to move some money into something that sounds good. Silver was running. I said, fine, let me get it. I chased it a little. I said, whatever. When it comes back down, I'll add more around support. And it's silver. It's not like it's not like all of a sudden no one's going to want to use silver anymore, and we're not going to. Well, I shouldn't say that, but we're not going to find a mass of silver that will satisfy all our needs anytime soon. I don't think the mining for silver is even kind of weird. Like the silver comes mainly from copper and nickel mines. Hey, we're looking for copper. Well, we got some silver over here. Oh, awesome, dude. Great. But there are some silver miners. And that's what I really wanted to talk about. Silver is a commodity that moves with, it's supply and demand. Right now, the supply is very low. Demand is very high. And it's unbalanced. In my mind, silver should be a lot higher. It's a lot lower right now. We had a big run up and a lot of people took profit because silver was just trading sideways for a long, long time. And then when the interest came of it and it got bought up, everyone that's been trading and holding on for $21, $19, $14, $11, now they're seeing triple digits. Of course they're going to take profit. But once this is formed, this profit taking is formed, they start finding support. And we're on the monthly, and they're using the trade line, just as we did on the Tesla trade. Even on the 1 minute chart and the 15-second, the same practices hold true on any timeline. The EMAs can show bullish or bearish tendencies. We're still above the EMA. The same thing as Tesla ran up, right? We kind of got away from that EMA line and not the trade line. And we showed signs, bearish candle. Was this opposite shooting star, or is this an actual shooting star? I forget. Bearish candle either way, heading back towards the exponential moving average, finding support, and boom, doji, right? Same patterns we just talked about on a minute and 5 minute and 15-minute charts. We're looking on the monthly for commodities. And this is how you do technical analysis for long-term portfolios. So I started getting in around the end of January, beginning of February, and just held it, waiting for this support to happen. And then once we found support around the 70s, you add in a little bit like a normal person. And now we have this bullish candle here. And if you drop on the day, and I put on these high beams, it's a bull flag. Kinda, right? You have the pole, a flag, downward facing trend, breaks to the upside. And that's how you know when you get in. You want to get in once it breaks the trend and holds above it. This one looks like it was going to break, come back, and find support, but we just gapped up. It was like, a catalyst. We don't even have to get into it. But then you just look left to find where the next resistance are and do it accordingly. So if I've done a lot of one-on-ones, and people like the idea of holding gold, especially gold, not really so much silver, but commodities like a silver or gold or oil. And because of the geopolitical situations, these commodities are becoming much more volatile and a little more exciting. SPY's hitting 740. So don't shy away from silver. And also I want to bring up, I talked about the silver miners. The mining is how you can capitalize on a move on silver. So if silver pops and you're in a mining play, this is an ETF of miners. It's not a single company. But keep in mind that these companies are mining the commodity that they're selling. So if they're mining and they find a piece of silver and it's worth $11.60, and then they're doing the same job day in and day out, but now instead of $11.60, they're coming up with they're mining it's $33 for just saying this rock or pebble of silver. They're doing the same job, same work, and now it's $100 worth of silver. They just instantly created a profit just by doing the same work. So there's the all-in, I forgot what it's called, all-in expenses or all-in together costs, all-in costs. That hasn't changed, right? That Jim, Fred, and Jane, and Rebecca, and everyone that works in the office and the mines and runs the equipment, they get paid the same, but what they pull out of the ground is now worth more. So that's why you'll see mines for silver exponentially, they'll grow, they'll take off like a rocket ship sometimes when the underlying does. And I was in this earlier today, and I had to get out of it. I should have stayed in it. I think I did. I think I had small 25 shares. I stayed in it, but I wanted to get in to catch more. And I was like, what am I doing? Let's just take a step back here. Right. And trimmed it as it reached support. And now I have a nice, healthy, sizable position that I want to add along. But that's another video altogether. When you are building positions, you want to add or scale in as if you're getting into an extremely hot tub. You don't just jump in a hot tub and feel your skin melt off, or I was going to say you jump into an ocean when it's cold, but there actually is a thing, the polar plunge. The idea is to not shock your system. Because if I got in my entire position, like I did with silver, right? If I got in my entire position because I'm panicking, I was going through a lot of emotional, personal things. And then silver dumps. You're instantly like, well, silver's the worst. I'm not investing in silver anymore. But in actuality, if I had just scaled in, it would have been a nice play. So that's a little blurb on silver. This is the more volatile one, the juniors, the SILJ. There is one that's what is it? SLVR. Silver miners. Will give you exposure to the mines, and I think it's the more trusted, I guess you'd say, or the ones that have been around a long time. Those are in this ETF. This is this one is more the startups, the young guns, and these are more tried and true. But this one also gives you exposure to the actual underlying, so you don't really. You can if you want. You don't have to hold silver and hold that. All right, let's check back in on Tesla. Tesla is still retesting on the 9 EMA. Is that the same spot where we're retesting? So if we drop down in the minute, we see that it broke the EMA on the minute, and now it's retesting this support here. If this holds here, I kind of like it better because now I have more of a room to run. I marked this off. This is a technical level, 455. But remember, 450 is our GEX. And I'll mark that green. So retesting at a technical support or past resistance, I like better than retesting in on a trade line. Keeping my eye on the SPY. Let's flip over to that for a second. So 740 looked like it was the top today. I mean, we're not done yet. Look at this. Ran up, tested VWAP, broke below it, came back up. And then the second, third, and fourth time still held on VWAP. And now the next dip looks like it's holding this support here all the way from the morning and this resistance here. So here we go, right? Resistance, found support in the VWAP, broke above this resistance, came back, found a confluence of support. All these moving averages and the technical. That's a good retest right there. Boom, retest, and then you're in. I know it's a small 1-point move, but if you're used to that and you can sling that weight around, a 1-point move can be your daily thing, right? If someone gets in with 50 contracts, a 1-point move could be very, very lucrative. Or they just buy it outright. Buy 100 shares, it moves up 1 point, it's $100. Buy 1,000 shares, $1,000. The only thing that matters is the confidence of the trade and whether it fits your account size and appetite. If it does that, you're good. You're good. Here, this is it. SIL. That was the other one. The junior one is SILJ, and this is SIL. It's a little more of a, I guess, stable, you'd call it. They all have the same action on the price, but one is listed as to be a little more cautious. That's really what it is. So I know I touched on a few things here today, and I'm not even sure if the audio came in pretty well, but this was a good test for streaming, and if this comes out well on the other side, then we can do this a little more often. I'm gonna refresh here. This is the Tesla quant chart. And we'll see here, once we broke that sell level, that hard level, we came back. There's that doji we saw on the tech chart. It used the quant level and then boof, expanded from there. Now we're coming back and we're testing this support. So I touched on a few things. I did want to talk about silver. Don't shy away from it. It's very tradable, but it's very volatile. And it's also silver. You know what I mean? So I mean, if silver has a bad day, just hold, right? I mean, that's the theory. If Tesla has a bad day, there's no guarantee that tomorrow is going to be okay. Elon Musk is working on major things. The SpaceX coming out. There's lots of other catalysts. I mean, he went to China today, and that's what rocketed this off. If he decides that maybe on the plane, he's like, you know what? I don't feel like going to China. I'm going to turn around. You're going to see that in the stock. So that's what drives volatility sometimes in Tesla. Just like in silver, it's susceptible to catalysts. But I think silver as a commodity, and especially one has so many uses, I think it's overlooked. Everyone loves gold. Gold, it's gold, man. How do you not love gold? Well, I get that. But I think silver is in my mind much more utilitarian or just plain useful. I mean, the amount of wound supplies that I have that were AG and silver, I mean, they definitely saved my life. Regarding the infection. There's so many uses to silver other than making jewelry. That's my point. And I know gold has its electronic uses also, but I also think that silver is undervalued. And that's really I really wanted to talk about that. Silver is undervalued. That's pretty much what I'm saying. So when I chased it here, I knew that silver at one point is going to be above 82. Maybe not in the next 2 months, but at some point in down the line, silver will be higher than 82. And that's why I got in around that. And that's why I held when we dropped below it. So know what you're investing in. Don't chase just price action. Know a little bit of the fundamentals and use all the charts that are available to you. If you have access to QTA, use them. Don't say, oh, I don't need to check it. Look at this Tesla price action. I know price action. I don't need to check. Well, I'm sure you do, but wouldn't it be nice to get a mathematical check on your gut feeling? Keep in mind, these quant charts, this is not from an options table. This is not someone's thought process. This is cold, hard math. Most of the action happens between the 2 sigma lines, roughly 92, 93%. If you're out of those lines, expect to get back in towards the mean. People trade using just these 2 sigma lines alone. We get, there are alerts for it in the Discord. There's a whole suite. Not a suite for the alerts, but right here, 2 sigma alerts. One person. We'll advertise when I'm ready to do it. But this was a good test, and I think I'm post a video. There's a couple of questions that were answered in here, and really it demonstrates how to use the quant charts in a random catalyst move on Tesla. Showed it right here. Found support, blew through everything. You buy at the buy zone, you sell at the sell zone, and you walk away. I mean, that's why Bryant created QTA in the first place, to be able to look at something, look at it quick, know the levels, plug them into your trade plan, and move on. It's a beautiful thing. I know I think I started this with 15, 20 minutes in mind, but I think we went close to a full hour. No, 49 minutes. All right. I think we're also going to do a live today in-house. We'll see. We'll see. But this video will be available either way, and it will demonstrate most of how to use it. If you have any other questions, use the chat room here. Ask any questions here, and we'll answer them. And thanks for watching. Again, my name is Doc. For the next hour, I'll be in the chat room, and we'll see what we can do. Tesla is finding support, by the way. All right, happy trading, good luck, all that good stuff.